Hey traders, Parker here with another indicator. Today I've been introduce you to the what I'm calling the futures indicator. And basically what they're doing, they're plotting bars into the future. The low indicator, if you're unfamiliar with it, it's the unbalanced volume. And I put future just because it's plotting things into the future. So let's take a look at it. This is the S&P 500, and I'm gonna push this up to explain what this is. This is the actual unbalanced volume. If you're unfamiliar with that, just go over here. And it's a regular indicator on Thinkorswim, and this is what you get. Just gotta give it a second. And this is what you get. I modified this one where I'm actually using the average of the high-low close divided by 3, and that's why it's smoother than this one right here, just using the closing price. But for the most part, this is what you get on Thinkorswim. You get this one line with no other information along with it. So I'm going to get rid of that, and I'm going to bring mine back. So basically what I did, I took the difference for the MACD, and I added that coloring scheme into this one. And basically whenever it's above its future line, the future line or the line that's been plotted 12 bars in the future is orange line. So what the orange line represents is where the unbalanced volume was 12 periods back, and it plots that in the future. So when this crosses above, you know that the unbalanced volume is making a new high, or it's breaking above where it was 12 bars ago. So it's really, for me, is I use it as a momentum indicator because the unbalanced volume uses volume and price. So, and if you're not familiar with my other indicators, I put a channel on this one as well. And when a channel is broken, this pink line and this cyan line, when the channel is broken, or when the unbalanced volume breaks above it, the channel will go away until the unbalanced volume goes below the channel. Same situation with this blue line. If unbalanced volume breaks below it, it'll go away. Like right here, it'll go away, showing you that the unbalanced volume is making new lows for that period, or for that area of time. This is the midline for the channel. This purple line is just the average between the high and low of the channel. The cloud is actually the channel being plotted for 12 bars. So that's how this indicator works. So just like when you see MACD, histogram turning red, green, and pink and dark green, that's basically what these colors represents. So when the unbalanced volume is crossing below its future line, this orange line, it'll go red. But when it's moving up towards the future line, it'll go pink, and vice versa. When it's above its future line, it'll be green. And when it's trending down, it'll go dark green, or headed towards or converging towards the future line, it'll go dark green. But when it's divergence away from the future line, it'll turn green or bright green. Something extra that I put into that is actually the unbalanced rate of change. You can change this however you want to change it. I'm going to cut this off, and we're going to look at the actual rate of change. I'm going to make it a line, and I'm going to make it 3. So this is something extra that I threw into it. And you can look right here. The rate of change is just showing you how, at what rate this indicator changed. So I put in 12, but I divided 12 for whatever period you select, like 12. The rate of change, you use half of that to give you an indication of rate of change. And you can look at how the rate of change is brightening up. And the highest rate of change is over here in this area. So that's just something extra for those you enthusiasts who like to use rate of change. I threw that in extra. It actually shows up as little dots within the regular unbalanced volume. So that's what it normally looks like. But with this right here, basically that's what it looks like. Just to give you something extra to go by. The other thing I put in there as well, something extra, is I put in the multi-time frame. Right now, it's on the original or multi-time frame, so you can select. I want to look at it on 15 minutes versus the actual time chart. So this is what it looks like on the 15 minutes. You can see right here, it crossed above right there, giving you an indication. And actually, on the 15 minutes, these arrows represents positive divergence. So it's actually pushing above while price is making a new low. The indicator is making a new high. So that's how those arrows work. You get the cyan arrows and you get the purple arrows. I don't see any purple arrows right now, but they're there. And so you can change that, or you can go back to the original. Oops. Let me just cancel that. I don't want to mess anything up. But for the most part, that's how this works. And you're going to use this as a momentum oscillator or a momentum indicator because, like I said, it uses price and volume. You can actually paint the bars. You can actually hide the cloud. You don't like this cloud, future cloud. And we'll paint the bars. And I just need to cut the stop that one. And we'll see what the actual bars look like. So you can actually see what the bars look like when they're being painted by the unbalanced volume. You can see how everything switched up because it's following that code right there. As I said before, what you'll use this for is a momentum oscillator. You want to know if price and volume is trending higher. And that's what you're seeing right here with the S&P 500. This was the day that I believe the CPI data came out, and you can see this huge drop right here. And then you see how the unbalanced volume crossed above its future line and turned price green. And you get the same thing with this indicator up here. I call it the future cloud. And basically, this red line is the average of the high-low close divided by 3 plotted forward at 12 bars. That's why I have it set at 12 bars. And the cloud itself is the average of the high and low being plotted 12 bars into the future. If I didn't do an average, it'll look something like this. And you can see how crazy this one looks. I didn't want it to look that crazy or look crazy like this one looks. This line anyway. Because it's the actual average of high, low, close divided by 3. So, and you can see once price crosses above that or the average, I actually have the average of the high, low, close divided by 3. Once it crosses above the cloud actual twist. I found for certain indications that this actually works as support and resistance because the cloud actually serves as where the price was before and where it is now. And it's actually, like I said before, it serves as where price was and where price is now. And it actually serves as a support and resistance that I found in certain instances. And you can look right here. It actually, you can see this long low wick, so I would consider that support on this long low wick of this candle right here. But I would look at this long upper wick as resistance, and you can see how price begin to break down. You had certain instances where the unbalanced volume was breaking above, but you look at it, it's way below or fell completely out of that future cloud or future channel, I would say. And you can see when unbalanced volumes in this cloud and it's in this pink area, I would really look at it as not being a good buy signal. But if it's in the blue area of unbalanced volumes cross above this in this cyan area and it's breaking up above this pink line, I would consider that a good buy signal. But it's all subject to you and how you want to use it. But for the most part, I'm not giving any financial advice. I'm just showing you how the indicator works. But once you get the indicator and you have a good understanding of unbalanced volume, then I believe that'll work out as well in your favor on how to use this indicator. So we'll move over. Well, I really wanted to look at it on this choppy day. This is the choppy day right before the data came out. And you can look at how this just show you it's no trade in this area. I don't think it probably showed you if you wanted to use a 15-minute open range, you could take this high and that low and you can just see it's just chopping up in between those areas and really didn't get anywhere. But you can see on the unbalanced volume, it's adding those volume into those, adding the volume up and pushing it up. You can see right here, yeah, it gave you a good indication, hey, I'm above where I was. So if you wanted to take those small trades like that, but that's really a scalping move. You know, this move right here, you got positive. Here's your negative divergence that I was talking about. So that's negative divergence, negative divergence. Here's your positive divergence here. You can change, you can modify and change these colors on this indicator all you want. If the colors obsolete, they aren't working for you. But you can look right here, you got positive divergence on this candle. And you can see what happened next. Price actually pushed above, but it couldn't sustain it. So that was an overall just choppy day. Same situation here. You know, drop below this cloud right here. You got the same thing going on with unbalanced volume. You got unbalanced volume pushing above, and that's why you got these pink bars. Same way the MACD would color this stuff. The histogram for the MACD would color. I've done the same situation, except for instead of dark red, I put pink. But you get the implications that, hey, I'm moving from dark red to pink. I'm actually moving up. And that's what's happening. And like I said, I would generally take this trade because it's crossing above this pink line right here, which is your channel high. And it's in the blue area for the future channel, saying that, hey, this is possibly making a new high. So I would have bought in on this candle, possibly on this small pullback right here, or the 61.8 of this candle right here, and rolled it up. Because one thing is above price, where it's above this future line, and it's above this future average of the high and low. And you can look right there, and it all worked out. And that's basically how you use this indicator. You can pair this indicator with different indicators, but for the most part, it works pretty good as a standalone for these two to work together. Because you have a momentum indicator that uses price and volume, and it gives you different implications of the future and past. In the same situation here, this one works just specifically on price, and you can see that it works very efficient or very well. And you can go in there and you can do exactly the same thing. I put the same principle of the multi-time frame in this one as well. You can hide the cloud or not show the cloud and just have this one red future close line. And this is what it looks like on a 15-minute. You want to look at it and see where it was 12 bars on the 15-minute. You can see how it pushed above there. And you got your 15-minute future line right here. Even though it wasn't above there, it crossed above the high-low average future line or cloud and pushed above from there. I'm not sure about this is something I shouldn't do on this video, but I'm doing it. But you can see right here, it works just as well painting the bars as well. I was unsure about that, but it works just fine. So painting the bars on 15 minutes as well. So this is what I'm calling the unbalanced future indicator bundle. And really it's just two indicators. It's just those two indicators, and we can go up to a higher time frame, but I need to remember to add my lines back in because I'm actually tracking the S&P 500. So we can go over 3 years, and let's push back to the pandemic. And this is when the pandemic, everything just fell out. So everything just fell out. And am I still paying? I cut that off, so we'll cut that back on. So you're getting these ups and downs, up and down, up and down, up and down. But over here, when price actually crossed above this channel, you got unbalanced volume making a new high. And it's crossing above its future channel as well. And it's in this blue area or this buying area. I'm not going to say buying area, but it's in this higher area. It's above the average. This it's not a line right here, but the difference between these, this area right here represents the average of the high and low of the channel. And that's why I'm saying it's above the average of the high and low channel. Just same way this line right here represents the average of this pink and that cyan line. But that would have been a good trade right here, and you just wrote it out. So this would have been a great help when the pandemic happened. And right now I have this set for 12, but you can set it for a lot of people, like I said, like to use 21 on a day. So even if you set it for 21, you might not would have gotten in right here. You could have gotten in right here if you set this future cloud on 21, or you could have gotten in right here when it broke above the actual high low close divided by 3 line, or the future close line. And you just wrote it out from there. And if you kept it on 21, it's just telling you, there's, this working out of support. You broke below, but it's not a significant low, So that would have been a good implication of staying in the trade and riding it up. And really just waiting for news to get out. But for the most part, you can see right here. Well, like I said, I like to use 12. I generally am now using 12 on basically everything. But it's whatever your preference is. Let me go back to 20 or 21. 21 is just the Fibonacci line. And I use 12. 13 will be a Fibonacci number. 21 is a Fibonacci number as well. But for the most part, I like to use 12. So, and even on 21, it gave you some pretty good implications right here, especially right here. It didn't, on the unbalanced volume, it didn't go that high, but it did cross above and make a new high and cross through this as well. So that would gave you confidence in buying, but, your whole exit will be on you. And this is just my drawings that I put on here. You can see the S&P 500 still in this general downtrend, and in this channel, it still couldn't break above this new channel that it created. But it did. Did it cross below this? It did, but it jumped back up into it. But this is my general lines for the S&P 500. I mean, I could put more on it, but for the most part, this is where we are. And if I want to see a little bit more on this with in regards to support and resistance, I would actually put my support and resistance indicator, or my supply and demand channel indicator. I can't remember if I still have those fibs on there or not. But for the most part, once I put that indicator on it, it's going to find these different areas, or these different periods, or these areas I'm calling now. In my previous video, I called them, I said they weren't supply and demand, but in all actuality, that's what it is. It's showing you where prices turn, and prices turned in these areas. You can see right here, actually broke below this one right here, but it's still acting as an area of support at 357.04. But for the most part, you can see right here, it found these different areas of support or demand, and it actually pushed above it. Anytime price came back to these areas, it actually popped above them. Same situation with this area of resistance. And we can look right here, it's pulling these areas way back from here, from 12, 18, 20. And they're still acting as areas of support and support and resistance, supply and demand. And if I want to know where it was in regards to the future, here's my future line right here, and here's my future cloud right there. And you can see right here, according to unbalanced volume, my modified version of unbalanced volume, you can see it's still way below where it should be, or it was 12 bars back. So for the S&P 500 to, this is price and volume or momentum. indicator, and actually this is what they say about unbalanced volume. It's actually not a lagging indicator, but it's actually a momentum indicator, so it's real time. So for the most part, this is be the end of the video. You can see we had positive divergence here. You had this big drop, and then we had this big up, and then price actually moved up on this day on positive divergence. And even though we're moving down on this day, I can stop the this one painting. The unbalanced volume is still moving up. Before I press OK, the unbalanced volume is still moving up. Even though prices, it was a red day, and I'm looking at this right here. This is just, these pink lines are a gap, and I'm just looking at these other highs. I really can't get rid of this high right here, and I don't call this a gap fill because it actually, I mean, these wicks, I'm not calling it a gap fill, and you can see how it stopped right here on this gap. I need a bar or something to fill this gap right here before I say that's a gap fill. But like I said, this is the end of the video. I hope everything I said has helped you have a greater understanding of the indicator that I built and the unbalanced volume. And if this video is helpful, please leave me a like or some type of feedback or comment or anything. If you haven't already, please like and subscribe and look in the description for the actual indicator. I wish you all the best. God bless and stay safe out there.